Hello and welcome to Bookkeeping Controls. I thought it might be quite good to do the practice assessments in the back, but actually talk you through it really. So what I've done is I've taken the Osborne Books Bookkeeping Control workbook. I've got the practice assessment one, task one, set up on page 65. So I'm going to just talk you through it really in here. So we've got some various main methods to pay things into a bank account. Match the appropriate ones in there. So Tristan Limited, and so I've got this in Excel, mainly because I want to be able to have the different the different method of calculating the wages transactions that I provided to you in Chapter 5. So Tristan, he's going to make £100 in regular equal monthly payments for a loan raised from a finance company. Right, so it's going to be regular, okay, because it's going to be the same thing, and so that is going to be a standing order because it's always the same. So regular payments would be the standing order one. Lily, let's have a look. Lily Design does not like the risks of having to use cash for small purchases and needs a safer method of paying for low value items. Well, that's going to be a credit card, isn't it? Okay. So it's not going to, because we haven't got cash in there though. What we got available to us, we could go contactless debit card or we could go credit card there. Actually, let's hold on that one. So it's going to be one of those two. Let's go the debit card either. I've got to be honest with you, the contactless debit card and the small purchases means that I'm sort of tending to go to that one, but let's just wait a second and see how we go for that one. Boris Limited. So, for Boris, what is Boris Instruments has an employed newer travel salesman who needs to pay for expenses and business trips. So that one's going to take up the credit card, which means that the other one's going to be the debit card. Yes, we'll go over that. Yeah, that's where I'll replace that one there. Okay, weekly. Let's see what weekly's going to do. Has taken out insurance which involves making payments that will increase during the course of the year. So these payments are going to change during the course of the year. And so because it's a changing payment, we're going to be using the direct debit on that one. Okay, now what I want you to understand there, so in this Tristan one here, they were the same payment, so it was the standing order. The weekly one, it was a different one, so it was the direct debit. Okay. James Rich, oh, let's get a bit, yeah, okay. Buying a Ferrari for £175,000 a company car. The garage needs a form of payment that cannot be stopped by the buyer. So that would be, so that's going to be a bank draft. That's going to be the last one there, though. That one's going to be the bank draft. Now, what would be interesting would be, because it says it cannot be stopped by the buyer. Well, actually, I could have just not handed over the bank draft there. So if we wanted to, really, we could have used chaps there instead. But actually, we're going. That's the one that you got available to the bank draft. So that would be the first part of that that question. Okay, so let's move on. Let's just check the answers. Actually, to be fair. So Tristan went for the standing order. Yeah, that's correct. Lily goes for the contactless debit card. The reason why was because it was small amounts. So it had to be less than £30 to be contactless debit. Boris went for the credit card. Yep, because that was a travelling sales person. Weekly went for the direct debit because it was a variable. It was a varying payment there, though. And James Rich went for the bank draft because we handed it over, and that is a cash. That's a basic. I suppose really, if we're going there, if James Rich would have paid by his own cheque, then that he could have cancelled that. Though, if he pays by a bank draft because it's a cheque written by the bank, it couldn't have been cancelled. Okay, let's do the next one then. Managing the level of funds in a bank account requires careful use of payment methods. Yes, it does. They vary the times in there, so let's go through. So CHAPS payment then, that one is going to be deducted on the same day. CHAPS 1 is going to be the same day. Okay. Credit card is going to be a month later. Yeah. Okay. We've got that as an option. So we're going to get a bill in a month later for that one. Okay. Standing order, that is going to be that one is going to be deducted on the same day. So we set that up, and we set that up for a specific day, so that will be on the same day that we studied set up to go out. I don't know, you might say it's the first of the month to go out, then you decide when it's going to be. And direct debit is also going to be on the same day. That's when we set it up as well. Would be the same day. Okay. Right. So that's what we got for that one there. Let's look at what the other options would have been. Transaction a month after taking up to a month after the transaction's taken place. So that's a credit card. You know, so we do our payment at some point in the next month. It's this credit card statement is going to come in. So it's up to a month in there. They're deducted after 7 days, but that's going to be something like a check or something like that there though. And the after 15 days could be a check that's really, really late. Right, okay, so that was question B. Yeah, just find the answers. Right, okay. It's important to understand the effects of errors in a bookkeeping system. Let's go on a new page now. Here. Show which errors. Let's make this a bit bigger as well for you. Show which errors cause an imbalance in there. So, commission received, okay, of £150 has been credited to the rent received account. Okay, so we've gone debit, bank, 150, and we've got credit, rent received. I quite like to indent my journals. So credit and rent received 150. Okay, what should the journal have been? Debit bank 150, credit commission received 150. So we've not seen any differences in our debits and credits. The thing is, so it's not going to cause an imbalance to the question. So that's not going to be an answer then. So A is not going to cause an imbalance. Okay. What B then? Let's go for B. Right, sales returns. So we've gone right. So it should have been debit sales returns okay 225 and credit sales ledger control account 225. So sales returns have been credited to the sales account, right? Okay, so that's what it should be. Instead, what we've done there though is we've gone credit sales ledger control account. Okay, 225, but we've also gone credit sales 225. So you can see there we've got a different that there though. Instead of going debit sales returns, we've gone credit sales. So that one will cause an imbalance. Okay. The bank payment for vehicle repairs has been recorded in the cash book only. Right. Okay. So we have put that in. We should have gone credit bank. Credit bank. Not whatever amount. Let's say £100. Okay, so that's what we've done. You know, we should have gone debit vehicles and credit bank. £100 each, let's say. So that one would cause an imbalance. The balance of the sales account has been calculated incorrectly. So in our T account, okay, let's put that in there. Okay. In our let's go back. So in our T account, we've had some figures brought forward. Let's say 100 brought forward, and some amounts come in. So in our sales account, so sales on credit of, let's say, that, and payments we received of that. There though, and let's put it there nicely. And so our brought forward, our carried down should have been that minus that, but we calculated that incorrectly. Well, what that will mean is that our balance sheet will not balance. So, so in that answer then, A was a no, wasn't it? That was just fine. The other ones all caused an imbalance to the trial. Yes, they did. Right. Okay. 21. Okay, classify the following errors. Discounts received has been recorded in the discounts received account, so it's as of 72 instead of it's been recorded as 27 instead of 72. So that is going to be an error of original entry. So our discounts received was put in there as, credit that one. So instead of putting it in as 27, oh sorry, it's been put in as 27, and it should have been put in as that 72. That is known as an error of original entry. The correction would be to reverse that journal and put in that one. I think what would the debit be? The debit would be purchase ledger control account. To be honest, so I'm going to expand out on the book so that we don't waste all of these questions. So if you asked how to correct it, then you would have reversed out that journal and put that journal in. Okay, bank payment to a credit supplier has not been entered in the cash book or the purchase ledger control account. So that is an error of omission, so it's just not there. Okay, and the correction for that error would be to put that in. Okay, the sales invoice for £340 for Playwell Limited has been debited to the account of Playtime Limited. Right, so let's just go through what we would have in here. So a sales invoice for so we've gone debit sales ledger control account 340. We've gone credit sales 340 here. Okay, but then in the sales ledger, so this would be what has been posted from the sales daybook into the general ledger. So it's not affected your trial balance. Into the subsidiary ledger, the sales ledger, it's gone into Playtime. Playtime as debit Playtime 340 rather than Playwell. That is an error of commission. So you would adjust your sales ledger. Okay. Question E. Alright, so the writing off of irrecoverable debts from the bookkeeping system is recorded in the journal. Okay, because we have our books of prime entry, and so anything that we would post from our books of prime entry in our other ones, except for the journal, would come from there. So what we've got to basically do then, I think, in this, state one other transaction that is recorded in the journal. So basically, it's going to be one of these transactions in the bottom that isn't recorded in one of the other books of prime entry. So, correction of errors. That's going to be, there's no other book of prime entry for that other than the journal. Faster payments to suppliers is going to be the discounts received daybook. Prompt payment discounts allowed is going to be the discounts allowed daybook. Sale of goods on credit to customers is going to be the sales daybook. So basically on this question here, you're trying to look and see in those payments there, is there a daybook that's available for the payments? And there isn't one for the correction of errors. but there is one for the other ones, so that would be the one that would go into the journal. Okay. Right, task number 2. Okay, so in task number 2, I'm going to use this. So this is the table that I gave you in the video that would be different. That adjusts. I think just makes this a lot easier than the book. So if you look in the chapter 5 video, there's a whole video on this that makes it a lot easier if you're struggling with this question. So let's just drop our figures into this table in here. Learn that. So income tax. Let's put in 47780. Okay. Employers' national insurance. 3840 in here. Employees' national insurance. This one in here. 2860 in here. Employers' pension contribution. Employers' pension contribution 1740. Employees' pension contribution 1740. Okay. Right, so we haven't got anything asking us for our total costs. Right, okie dokie. So what are the journals then? So let's make these a bit bigger so we can see what's going on here. Okay. Right then, so our HMRC control one in here is going to be the taxes. So these ones that I put in bold in there, though, that one, and that one. Debit the wages control and credit HMRC control. Okay. What's the next one? Net wages paid to employees. Oh, the total wages expense for July. All right, okay. Let's put that in 4827. Okay. So the gross pay must be equal to that minus that minus that. Sneaky question. Okay. So that was our wages expense, the total expense to the employer, which is made up of the gross pay to the employees, plus the tax for employing people, the employer's national insurance, plus the employer's pension. So that minus that must give us the gross pay. The net pay that the employees would get down here would be their gross pay minus all of their deductions. So that would be that. So that would be the net pay, and that would be debit the wages control account of that figure and credit bank, that one. Okay, and then the pension fund liability is going to be these two contributions here, the pensions one there and the pensions one there. So that's going to be debit the wages control that and credit the pension control that. But what you can see here is I really haven't thought at all in this question because I just created the table and just dropped the figures in. Go through that video. If you're struggling with this one, just go through that video again and again. Learn that table, and it'll just make life a lot easier. Right, okay. Maybe a lot faster as well compared to what I think people normally take that one. Right, so let's open up another sheet. Let's see what we're on to now. It's a bit bigger as well. Okay, this is a customer's account in the sales ledger. Okay, customers now cease trading. Boo. And they owe an amount which includes VAT. Record the journal entries in the ledger to write off the net amount and the VAT. Do not enter a zero in unused debit or credit columns. Okay, so what have we got then in here? Let's create our T account and drag that. Let's create our T account in here. A second. You can see that I'm actually just doing this in real time to see whether I can answer the questions. Always useful to see whether you've got any bit of faith in people. Right, so this is our figure brought forward in here, 1,038. That's that brought forward. You've got an invoice. We sold them something else. We've got a credit note, 78. We've got 144 there. Okay. Now I like to do this by adding up both sides first, like at, and then working out. So that's my carried down figure, or my carried forward figure. Okay, right, so I'm going to have, right, now I need to work out within that figure there, what is going to be VAT and what is going to be net. So, first of all, anyway, I'm going to have credit sales ledger control account. Oh, actually, I'm going to indent that because I always like to indent my journals. Sales ledger control account. Let's get that one nailed down before we start. 1104. Okay, on this figure here, then what's the VAT? Divided by 1.2. Right, so it would be that minus that, 184. Right, so we're going to debit VAT control, 184. And we're going to debit irrecoverable debts as well, the difference, which should be the 920, I think. Let's check that. Yeah, and we're going to debit irrecoverable debts. The 920. Then we're going to check our work. We're going to add that up. And that's going to be the answer for that. Okay. Now, what I would say here is, why did I take so long doing that? Just so you can see the process. I do that faster in reality here, but you can see I put my T account in. I'll work out what my carry down is there. So I've produced that first. I like doing it like this method here, and actually, to be fair, even there I would go even over the top. Actually, if I was in an exam, so I want to. I'm going to be honest. In the exam, I'm going to be wanting to get 100% of this right. So I then even do that there to just check that that was right, and then that would be my brought down. So I would prepare my T account like that in the exam. It makes your exam technique rock solid. I then worked out my VAT. Now my VAT would be that that would be my net. And then take that figure and divide it by 1.2, and then I'm going to take the net off the gross to get the VAT figure. Again, nothing really, a bit long-winded, and nothing really trying to be very clever in terms of shortcuts, but that will hold up in the exam much better. I've then written down, I've then created my journal, and again, even here, I've made my journal add up. Don't shortcut yourself in the exam to save anything. So that's that. Let's just check, am I right? Yeah, I am actually. Here you go, me. Okay, so let's do another one. Let's clear all this. Right. Oh, no, what am I doing? Let's just make that a bit bigger. Okay, so B, a new business has started and there's a new set of accounts to be prepared. Partially completed journal shown in the entries below. Okay, so we've got by entering each item in the debits or credit column. Right, okay, so fixtures and fittings. Right, let's go debit and credit. Now, what you're going to see here as well is you'll notice that I put a gap in between there, like that. So I decided fixtures and fittings. Is this an asset or let me just go through in here. Asset. Actually, what I'm going to do is I'm going to show over here my thinking. Okay. So is this an asset? Yes. So it's an asset, or is it a liability? Is it going up or down? So it's going up. So an asset going up would be a debit. So I'm going to put that in the front side there. I'm going to go debit. Okay. Bank overdraft. My thinking there, well, that's a liability. And that's going up. A liability that's going up is a credit. So that would be credit. Yeah. So 7500 and 2150. Okay. Capital. Okay, that is a liability. It is a liability to the shareholders. Remember when I sort of, if you look at the videos, I say the accounting equation in the book is wrong. It's because the accounting equation is assets equals, so assets equals, Excel goes a bit mad there, liabilities plus and capital. It is the liabilities to non-shareholders and the liabilities to shareholders. Assets equals liabilities. By doing it like this, it's way easier to do the journal, which is why I disagree quite heavily by trying to say that the statement of accounting position or for the statement of financial position is the accounting equation. It is not. Right, so capital. It is a liability. We've agreed that. It's a liability to shareholders and it is going up. So that is a credit. Here, 10,000. Sales ledger control account. Okay. That is an asset. People owe us money. It is going up. The open journals is always going up. And that would be 4650. And let's add all of that up. And our journal balances. And we're happy that that is the correct answer. Okay, let's move on to the next one then. Task number 4. This, how many tasks have we got in this thing here? It's quite a lot, isn't there? I might split that up into 2. I'll probably do this task and then I'll leave it today. So let's go over here. Make this a bit bigger. Sorry, home. Yeah, a bit bigger. Right. Okay. So this is a summary transactions recorded in the VAT control account in July. Right. Let's create a control account then. Okay. And right. So we've set up a control account there. VAT opening. So they brought forward figure 1585. Okay. Right. Go down. Okay, so really now what we're doing then, and I'm going to go back to this whole thing. So the whole thing is going to be liabilities because we all know that this is liabilities, and now we've got to try and work out whether it's going up or down, isn't it? To determine whether it's a debit or credit. The total in the sales day book. So we've made sales to somebody else. We're going to get cash in from those people. So the inland revenue is going to go on some money of that. So that's going up. The first one. So that one there is going to be a credit. So we're going to go credit 2627. Okay, that's going to be the first one in there. And also, sorry, hang on a second, brought down. Idiot. The brought down, sorry, is they're going to owe us. It's VAT owing, isn't it? So the brought down, sorry, on the side 1585. There's the brought down. Actually, yeah, so the brought down there, so it's a liability. It's the starting position, so I'm going to say it's going to be up. Right, okay. The next one, sales, then is going to be a liability, and that's money that we're getting in. So the inland revenue wants to take a part of that, so that's going to be liability going up. So that's going to be sales day book in there. Okay, purchase book, purchases. So we paid VAT on this in here, 1345. So that is going to be a liability because it's VAT, but it's going down because we can net that off against the amount that the inland revenue or HM revenue we owe HM customer revenues. Right. So total in the purchases return book. So this is negative purchases, isn't it? There's cash coming back in. So we had a figure somewhere earlier on. So that's going to be a liability going up. I may as well just copy this down here. Okay, so that one's going to be there. 286. Discounts received. So this is discounts that we received. So it's a reduction in purchases. So that is going to be on this. It's going to be a credit. The liability is going up, so it's a credit. And total VAT in the cash book for cash sales. Okay. Oh. 728. There's a liability going up, so it's a credit. Total in the petty cash book for expenses. So this was VAT that we paid. And so that's our liability going down, so it's a debit. We paid out some VAT for that, so the HM Customer Revenue Customer, so, and then a payment made to HM Customer Rep, so bank. We make a payment to them, so credit, so debit the VAT control account, credit bank, and that's 1585. Here, liability down. Right, what I'll do then as well is I'm going to provide you then the opposite side of these credits, so you can see what there. So that would be credit VAT. That'll be capital, won't it? So it'll be debit capital. Debit capital would be that one. Okay, which would be the net off there though. That would be in terms of our sales day, but then we've gone credit. Yeah, so actually, I mean, to be fair, there's no point in really doing that. We're just wasting time, aren't we? Mess your day out. Right, okay, so at the end of August, the VAT control account has debit entries. Okay, so we're going through here. Debit entries of 3412. Is that what it sort of says here? Oh, anyway, goes down to the bottom and has 3422. And credit entries, 3422, and credit entries of 6155. The following transactions have not yet been recorded in the VAT control account. VAT of total of £310 in the sales return day book, so that would be a debit. And 115 on the irrecoverable debt. 115. Okay. What will be the balance brought down after the transactions have been recorded? So let's now add those together and add that together. Now you notice I do this slightly differently to the book because I like to do one set of calculations first and then do my deductions. And then I re-add it, just because it's a rock solid method for the exam. And in fairness, I used to do this in real life when I actually had to. When I first started out training, I had to do accounts manually. I'm not ridiculously old, but I am that old. So it would be 2308 would be the answer. Let's have a check of that one. Oh yes, I got that right. So let's just go through here. Credit in the exam questions. Yeah, 3 true. Great. Right. So we're up to task 4 in there. That was 34 minutes, but a lot more detail in there. I think I'll stop the video now and I'll do the rest in another video at another time. Hope you enjoyed that, and I hope it was useful anyway, and you can see how I sort of think in there, and also got a bit more exam technique about how to do it. Thanks a lot. Thanks for listening. Bye bye.